Welcome to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and we're going to be talking about things that are happening and in the markets these days and ways to protect your wealth, obviously with real money and how that's going to work and how it's going to protect you against what's happening these days, and also grow your wealth, grow your purchasing power, which we have seen from gold and silver over the past 2 decades and will continue to see so because ultimately they're a finite asset. They've been money for thousands of years. They are essentially indestructible. Gold doesn't even lose its shine. Silver tarnishes slightly. They're still pulling gold coins out of the ground from thousands of years ago. It's outlasted civilizations, and there's a reason why it's continued to be a store of value for that long and will continue to be so going forward. Jerry, great week in the markets for gold and silver, which we'll get into. For us everyday Canadians, it's brace for carbon tax impact, as though we haven't had enough with inflation and interest rate hikes, more taxation all over the place. And it's getting tougher and tougher, and I think it's becoming more important where you store your wealth, because you need a leg up, and we all need a leg up on what's happening. So how has gold and silver performed this week, and how can gold and silver give us a leg up?
As we're recording this show on the 22nd, Friday. Hello, everyone. Silver down slightly on the week. We started the week off at $25 US. Went as high as $25.75. It looked as though overnight it was going to take out the $26 level. And then someone hit the button, and then we're down under the 25 range. So we're sitting around 24.70 right now at a good support level. Yeah,
we're now in a support level that is higher than where we've been for the past several months.
Yeah, that's key. Knowing and understanding, looking at those, the retracements. If you retrace higher than the previous support level, that's a very good thing. It's a good reset. And we look at the gold market, the same thing. This level of 2180, 2150 has become a pretty good support level. Gold started the week off at 2160 up to $2,220 US, and we're sitting at about 2180 today after, I think it was some inflation data that came out today and even yesterday. So a lot of reaction to what the Fed said this week.
And yet, just think about it. A few months ago, we were trading at $2,000 an ounce. Crazy highs in the gold and silver market, and it was consolidating. It wasn't going back down. People wondering what's happening in the market. It's just so funny how quickly the gains are forgotten in many respects.
Yeah, we were trying to get over that $2,000 hump. Can gold break 2,000? And now today we are just eyeing 2,200 again. Gold looks like it will break out the 2,200 mark as we move forward. And we look at the silver to gold ratio. We started a couple days ago, 85 to 1, silver to gold ratio. And now we're sitting at 87 to 1. So anything over 80, guys, is a silver buy. Anything below 50, that's when you want to start looking at selling some silver and getting into gold. Some simple strategies we'll get into together. If you give us a call, we could talk about these strategies for you.
And again, the number 18778 Silver, the website, guildhallwealth.com. Jerry, there's a lot of euphoria out there in the stock market. In the real world, completely different subject, right? Yeah. We've told people for the past year, hey, we're already in a recession. You don't need the Fed to come out and talking heads to come out to tell you what you already know. Yeah. Okay? The everyday Canadian's already in a recession, right? You don't have to wait for BNN to tell you. But they still want you to believe that. They still want lots of distractions, and they still somehow keep the market rising. And one of the things that I saw this week that we put out on our X is that stock concentration hasn't been this high since the Great Depression, since before the Great Depression of the crash, meaning all of the money is being concentrated to one little place. I said it's like Scotty on Star Trek. It's like we need to focus all the power on the front shields. That's what's happening right now. I mean, that is a tenuous situation, isn't it?
Absolutely. You can't have that. This is a very bad thing. Usually when you see a consolidation of the banking industry, you had, over 12,000 banks, and at one point, over the past several decades, and now you have like 15,000. How many regional banks went down last year? And more banks, and we're seeing this concentration, this merging from the Dow, which has how many companies are in the Dow, and you now have everything focused in on the Magnificent Seven. This is a very bad thing that's culminating, and it's getting worse, and it's going to hit a climax, Jeremy, and we are excited to watch this play out because this is a bubble. You can't call it anything but. Call it what it is. This is a gigantic bubble situation on top of many other bubbles that are out there. We don't know which bubble is going to burst first, but there's a lot of pins out there.
And the big question is how is that money getting into the market? And this is pretty crazy because if you look at the derivative portfolio on the major banks, it is absolutely stunning. You're looking at JP Morgan, and again, this is on our X. JP Morgan has something like $61 trillion in derivatives. Is that what's pushing up the stock market right now? Because we know that it's not the middle class who are putting their money into the stock market. It's not Main Street putting their money into the stock market. It's got to be the institutions. Mm-hmm. And what are they doing? Are they all deciding? See, we know that in a low interest rate environment, you got to chase yield. And when interest rates are at 5.75, whatever, above 5, and inflation's still raging, mm-hmm. You're still chasing yield.
Yeah.
You still know you have to chase yield. Is it that the pension funds are saying we have no choice but to buy the Magnificent Seven?
Mm-hmm. Something like that. I mean, they're looking at these options. You have to start chasing. And the chase is on, especially when these pension funds.
That's a little irresponsible with people's pension money, if that was the case.
Well, look at what they did with the up in smoke, the cannabis craze that happened with the pension. How much money did the pension companies lose with that play? And all they're doing is they're throwing dice with people's money, with people's wealth, with people's savings and futures. And people today, Canadians today, are not looking to roll the dice with their wealth any longer. They're taking the responsibility for once. I spoke with a guy, he's in his 70s. Absolutely terrified. This was the first time he actually had to do a self-directed move on his own for his own RSP. Forever he was able to rely on his financial planner. They did very well for him over the course of the years, but there comes a point where he lost trust. When the answers that he was getting did not compute to what he was seeing on the television, to what he was seeing at the grocery stores, it didn't compute. So there comes a point when you just lose trust. Even at the age of 70, people are taking the wheel of their wealth for themselves and they're putting it into another store of value.
Well, I think that a lot of people are getting it, but there's still a lot of delusion out there.
There is.
And I'll tell you this, though. In London, there was someone who put in $580 million. Some entity put in $580 million into a silver ETF. Now, I would say they should have gone out and bought it themselves, right? Bought the physical, but who knows? Maybe they're putting that money in. Remember, BlackRock did that. Put the money into an ETF and start taking delivery. Either way, you've got a massive, massive influx of investment, because it is an investment vehicle, into silver. Someone's putting in $580 million. Think about it. Follow the smart money. People are getting involved in the silver market because it's so incredibly undervalued. When you're looking at a ratio that's over 80-1, you know that's the case.
Yes.
And if you know that the cost to pull it out of the ground is something like $20 and rising because of environmental issues, because Mexico's shutting down open pit mining, because costs are just generally going up, and you're sitting here trading at $25 for all-in retail product, it's absolutely crazy. Actually, it would be $27 all in. But the fact is that you're looking for something undervalued that will help you grow your purchasing power against all of these things that are happening, carbon tax and, all of these taxes that are happening everywhere. You have to fight and you have to try to get your rebate, and silver will get that for you. The number 18778-SILVER, the website guildhallwealth.com. Remember, if you can't hold it, you don't own it. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778 silver, the website guildhallwealth.com. At Guildhall, we only deal in physical precious metals, and we always recommend that people start slow. Even if the market's moving quickly, it's important to understand what you're doing. We know that this is a new market for a lot of people. What would you say some of the biggest questions that people get right out the gate? What are sort of the typical questions people ask you when they're starting out?
Well, after deciding that they need precious metals to diversify their portfolio, a common question is, which one should I go with? Should it be silver? Should it be gold? And I usually at that point revert to the good old silver to gold ratio. This ratio goes back centuries, so it's time tested. It's very trusted for us. It gives us an idea of what's undervalued. And right now, at silver at 87 to 1, you need 87 ounces of silver to get 1 ounce of gold. There are times when the markets, usually every 5 years, this reverts, the 80 goes back to a 50. That's a time where you can think of, we'll have that conversation to liquidate the silver and then go into gold. You can reshuffle, and what happens is you end up with more ounces after the year. So it's a strategy, and knowing that, we have this strategy, you're not alone. We're walking through this process with you. It's a rather newer process, but it's something that this is an asset class that has stood the test of time throughout revolutions, throughout currency devaluation, throughout hyperinflations and wars and market crashes. Gold and silver have been there and will be there for your portfolio when you need it most.
Yeah, one of the things about when you're owning precious metals for the first time is sometimes people will, it's great they're taking control of their portfolios for the first time. And then they kind of have a question about the actual physical asset itself, because you're buying a physical asset. It's not an investment, right? It's physical asset ownership. And so there's a retail cost for these things, and they have to understand the cost. And of course, it's based in US dollars. So there's some of those things. But then it's also, you sometimes get the question of, well, will you call me when it's time to sell? No. We're going to show you how to understand the value of it so that you know when you're getting good value, when it could potentially be overvalued. How do you know when it's undervalued? See, when gold is weight, it's a weight. It's not a price. Once you've started to sort of gain value in your gold and you've overcome your cost of doing business, you revert back to sort of what Warren Buffett says, price is what you pay, but value is what you get. It matters how many ounces you have eventually, not where you are in terms of price.
Exactly.
So that's something to overcome. But in terms of selling, once you understand that it's a value, it's a weight, you can start to find criteria to understand, well, is it a good time to sell? So you mentioned the silver to gold ratio. Okay, at 80 to 1 or plus, that's a crazy, that means silver's way undervalued against gold.
Buy silver.
In 1980, it hit 16 to 1. 16 to 1 is the historic ratio. That's the ratio that Alexander Hamilton used to create the bimetallic standard. And the reason for that, by the way, is that if you have a gold standard, then the rich will own all the gold and the poor don't have anything. And the everyday man needs a way to get a leg up, and that's why they had silver. So that you could say, oh, I can get more silver because there's more of it. Right? So they gave an advantage there. But most people who talk about gold, especially in the context of Bitcoin, don't understand that.
No.
They don't know history. Say, oh, this is a great currency. You say, oh, well, excuse me. Every major bank in the U.S. in 1850 issued its own currency, backed by gold. Right? Yes, there were some issues with, could it be trusted in New York if it came from San Francisco? And crypto kind of fixes that. Okay, great. But the currencies weren't sold on their own. They weren't used on their own. It was all still gold was backing it.
Right.
And by right, silver. But then they took silver out, right? And that's when you had the gold cross speech by, what's his name? It'll come to me. I've lost his name. And, they took it out. They took silver out, and then they went after the gold standard, which means it rises to the rich. And then they got the central bank, and by 71, there was no gold standard. They controlled it all, right? But I digress. In 1980, it was a 16 to 1 ratio. In 2011, we got down to a 35 to 1 ratio. And also in 2011, the gold peaked around 2000, just under 2000, and the
Dow.
There was the Dow gold ratio at 4 to 1, but you also had the exchange rate was almost par.
Oh, yeah.
And so imagine if you took your silver at 35 to 1, rolled it into gold at a 4 to 1 against the Dow. These weren't perfect numbers, but definitely if you'd seen them come down from, Dow gold ratio in 2000 was like 40 to 1. So you've gone from 40 down to 4. Mm-hmm. I think maybe I should take something, right? You learn in retrospect.
Yeah.
And you say, okay, now if I roll my silver at 35 to 1 ratio into some gold and gold dropped down, but the exchange rate went up. So on gold, you actually only ended up losing off the top, right? You're at a casino.
Yeah.
You make some money, you give a little back, you say, you know what, I'm going to walk away, right?
Yeah.
It's that kind of thing. No one rings a bell at the top, by the way.
Absolutely not.
Okay.
Right.
Just so you know, no
Right.
one calls you right at the bottom, and you never open the newspaper and say, "Oh, Jerry, what's your sign? Oh, this horoscope says today's your day.
Perfect.
Invest in Tesla stock."
What are the numbers?
What are the numbers? So you could have done that, and you would have come down something like maybe 20% at the end of the day. So you would have gained $18 to $48 silver, converted some of that over to gold. Gold only came off 20%, and you really captured it.
Oh, yeah.
Right? So there's lots of different things you can look at. Ratios are a big one, but it's all about understanding value. What drives me nuts is that people conflate currency and money. And there's no weight. There's no way to understand what it's worth. And that's why inflation is so key. Inflation, they really screwed it up. I'm moving on to the topic here, right?
Please do.
So if you liked what I said and you want to know more about that, the number's 18778 silver, the website guildhallwealth.com. But that's why inflation, they want it to be covert. They want inflation. They want you to believe that 2 and now 3% inflation is okay. That it's okay for you to lose 3% of your purchasing power every year and 30% every 10 years. Mm-hmm. They want you to believe that.
Yeah.
But then when it's actually running at 6, they're stealing another 3 without you noticing. But now everyone notices.
Yeah.
That was a mistake. That was we have to speed up the game. We have to speed up the game. We've made them, and now everybody knows. Everyone can see. Now, when it comes to inflation, the government wants you to believe, they want you to believe that the way you stop inflation is to stifle production. Mm-hmm. That's what they want you to believe.
Yeah.
That the only
Stop
way
advancing.
Yeah. Don't produce more so that there's more goods, right? What's inflation? More money chasing the same amount of goods. So the idea here is, well, let's make it so that there's less goods. Mm-hmm. Instead of, well, how do we make it so that we can produce more goods for all this money we've created?
Yeah.
Right? Here's an example that I think every Canadian could appreciate. We're experiencing a population trap. There is too many people vying after the same resources that nobody's standard of living can rise, and everybody's taking all their money to keep up with the standard of living because there's more people going after the same resources. Make sense? Mm-hmm. If that still doesn't make sense, look at real estate. The reason why rates have gone up and prices have not come down is because you have more people vying after that after that product.
Yeah.
Also, I see personally when I go onto MLS, there's still a lot of people who refuse to drop their prices. Mm-hmm. They just somehow think that they deserve that price still, right? And so you don't see the things moving. Anyway, I digress.
Natural though.
The point here is that they want to stifle production.
It's not
the government wants you to stop making money. That's their answer.
So destroy your livelihood.
Yeah. So interest rate rises isn't going to fix it.
Interest rate rising. Powell mentioned this week that interest rates and inflation numbers haven't really changed your overall story. It's just proof that raising rates did not help bring down inflation. It will not bring down inflation, especially because inflation is much, much higher than 6%. If they really wanted to bring inflation down, they would have had to have raised the interest rates, not by 50 basis points, not even by 75 or even 1 point. You would have to go a full 5 6, 7 points higher, but they didn't. It was a slow chokehold on the people. But the lying and the taping over of the inflation number, there's too much light on it now. The truth is now being told, and the real effects of what the rate hikes have done really shed light on what's going on in the economy. The economy in the U.S. is in a downward spiral. Inflation is much higher, and the job situation is much, much worse than where we were 3 years, 4 years ago. The constant revisions in the job numbers, plus if we look at the jobs numbers data, the amount of people that are getting multiple jobs
Just to keep up.
This is proof in the pudding that they have lost control. And this is the reason why you need to get involved with precious metals today. The central banks have lost control. The fiscal policies, the Canadian economy. We may even see an election coming up. There is a non-confidence vote with Pierre and Trudeau. And
they canceled it. You didn't
they
hear?
did? No, I don't follow too much.
Trudeau got the NDP and the Bloc Québécois to say no. We're not going to back down.
Well,
so that's why it's brace for impact here, because they couldn't get it done, and it just shows more collusion in the banking, not banking, in the government in that respect. And it's back to the drawing board, and it's 70% of Canadians don't want to see this government anymore. But it's interesting with what's happening in the markets. You're trying to find reasons to get involved in gold and silver, and I want you to just think about this. I know we mentioned in the last segment that there was an investment into a silver ETF in London in the last week of $580 million. That's a pretty big bet in the silver market. Now, that said, the ETF gold chart, you can see again on our X, it shows that when JP Morgan became a joint custody of the GLD, you start to notice this strange divergence between gold holdings and price after this date. In other words, the gold holdings track the price.
Yeah.
So if the price is going up, more people want to get involved in the market, because let's be honest, everybody, people want to buy at the higher prices, not at the lower prices.
That's naturally, yeah. So the ounces go up with the price.
So the price is going up. Oh, that means people want to get involved, right? More action. They have to have more product in there because people are getting into the market. But in actual fact, what's happening is the product backing the ETF is going down. Surely it's only a coincidence. It couldn't be the suggestion that that this holdings is being rated of its physical, right? So I commented on that saying, and this kind of encapsulates it, very interesting that the investment vehicle used to divert people away from owning actual physical gold is now being rated of its actual physical gold that investors never owned, by the way. Who could have saw that one coming?
Backfired.
These vehicles were created to stop you from owning it so that they could own it. And I don't know who's buying it. Could it be JP Morgan's getting it?
Could be.
Could it be a major investor in the ETF could be going after it? Which wouldn't make sense because they would still need to accumulate on top of that. So if you can't hold it, you don't own it, someone out there wants it.
Yep.
That's your takeaway. Someone out there wants all the gold out of the GLD because the COMEX has already been rated. And someone else is buying all the ETF in London, probably to take delivery of that.
They're doing something with the physical.
So maybe you should take advantage of the low prices that we are at in silver and gold compared to the debt, compared to all the money printing, compared to the value of gold against everything else. And maybe you should consider holding some physical gold and silver for yourself, knowing that this thing's going to just take off at some point when the rubber hits the road. Give us a call. We'll show you how to get involved in the physical market. The number, 1-877-8-SILVER. The website, guildhallwealth.com. You know there's more to come here on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number, 1-877-8-SILVER. And the website, guildhallwealth.com. It's not all bad things going on in the market, I think that you can look at this and be very positive. There is a way to approach this market in a very positive way, that there are positive things happening. We talk about our friend Kevin Fernandez, who tracks all of the good things happening if you have an eye for them. Mm-hmm. It's a little bit like, if I say look for a red car, you start to see them everywhere. If you can start to see the good things that are happening in the world, you'll realize that all of this is just to wake you up. Mm-hmm. And in all of this, there are opportunities in the market. There are opportunities.
There are wins.
There are ways to take advantage of everything that's happening. And we strongly believe that that's the case in precious metals. Wait till you hear about one of the charts we want to talk about. But first, the Argentina's president, Javier Milei, this came out this week, has shut down and boarded up the Argentine Central Bank. That's right. You heard that. It is possible to destroy a central bank, just like Jackson in the United States got rid of the first central bank, and it is possible to get rid of a second central bank. And so we know that the people have the power to do these things. Click your heels 3 times. And there's no place like home. That's an allegory for getting rid of the Federal Reserve. It's Congress constituted thing. So you can just let it run out and bring the money back to the people. And on that point, I have to say, I disagree with Peter St. Onge, who's an Austrian economist who believes in Bitcoin. Because he said, well, my problem is that gold has to be centralized. What are you talking about? The U.S. Constitution didn't centralize it.
No, not at all.
It's the central bank that centralized it. So I wonder if he could clarify that, I suppose. But I didn't quite see where it gets centralized through the Treasury, which is its only job. The Treasury through the Constitution is to distribute it.
That's right.
Is to have you bring in your gold and have it melted and smelted and take your coin.
That's right.
And that if the demand is there, that they have to keep supplying the demand. Just like the U.S. Mint, they have to keep supplying. They won't do that. The reason why silver doesn't break massive records in buying is because the Mint, against the Constitution, decides, well, we're not going to sell more than that much. I know it's legally we have the right to keep satisfying demand, but no, screw you. Mm-hmm. We don't have to do that.
The U.S. Mint, yeah.
Right? So we're not going to let your financial voice be heard. Okay, fine. There's other places to buy silver, by the way.
That's right.
You can buy Canadian maples
That's
right here at Guildhall Wealth.
Right.
Just go to www.guildhallwealth.com.
Pick up a couple boxes. But I love what happened in such a very short time, going back to Javier Milei in Argentina, to see how he, with a few hard but simple steps, turned this ship around for better. Argentina posted their first surplus in almost a decade. Inflation is dropping like a rock. And now the third step of closing the central bank. He said he was going to do it, and he has done it. And the steps will continue. He will be joining the BRICS. Other countries are joining this move of de-dollarization. And even, this trend, and this is a very big threat of de-dollarization for the U.S. Federal Reserve and their note. This is going to be the reckoning that the Fed has to, or the U.S. will have to realize, hey, we have to actually do something for our currency and go back to a constitutional money. So a lot of wins, a lot of good developments, a lot of good news happening at the ground level in the U.S. Many states have petitioned to remove sales tax from gold and silver, to remove capital gains tax. Because why? You can't tax money, Jeremy. Gold and silver are money. They have been money for thousands and thousands of years. And we just keep an eye on what Argentina has done. We're going to replicate, and we're going to continue to accumulate and restore, the currency freedom and return it back to the people.
Yeah, and people, they have to understand what's going on. They have to sometimes feel it to decide to make those changes. They can't just listen to a couple of guys ranting on AM 640 about what's happening in the economy and why real assets like gold and silver are the way to protect yourself against these entities that are trying to take it from you.
Yeah.
And ultimately as well, I mean, if you read James Turk's book, and he's a big believer in the gold market and having gold-backed cryptos. He's a huge fan of that.
Yep.
Right? That he believes gold is freedom, and I believe that too, because ultimately, if you don't know the value of something, then it's easily taken from you.
Yeah.
And I know that being in the market, gold and silver, it does give you a very clear understanding of what value is, which is why, I definitely have some issues with understanding the value of Bitcoin. Very quickly, Jerry, I did some experimentation this week. How do you understand what the value of Bitcoin should be? And I thought, okay, well, the dollar's a derivative of gold. Bitcoin can't exist on its own to understand the value because no one can, right? You can't just say, well, it's got a use, right? Well, not everyone's using it, right? And a lot of people are putting their money into an investment. So, okay, so let's try to figure out how to connect it to the dollar and then derive a value from it. So I did some experiment looking at the debt, looking at some ratios, and also understanding that Bitcoin's goes to 8 decimal places versus the dollar that only goes to 2. And gold goes to 2, but 31.1 ounce is for a troy ounce. And I came up with, if you were to back it, it would be something like $40,000.
Right? Interesting.
And it came down to like a point. It was like 0.32 of a Bitcoin is an ounce of gold, which was very close to the grams. It was like each gram would equal a 0.0 of a bit, which I thought was interesting. But speaking of that, Jan Nieuwenhuis, he posted this out this week. This was brilliant. Since late February, gold's market cap has grown 1.4 trillion, which is more than the entire cap of Bitcoin. Bitcoin's market cap is $1.2 trillion, and gold's market cap is 15, and it increased by 1.4 in the last month and a half.
Just in a month. I mean, we saw that in the Bitcoin market, the euphoria of the Bitcoin market took over the silver, or overtook the silver market's market cap. But a week after that, gold just presses the throttle down and just expands by 1.4 in a matter of a month. This is the power of the gold market because it's being utilized around the world. It's beyond borders, beyond language, beyond religion. It's something that many countries can now start a relationship on. It's the foundation of a relationship between these countries that are de-dollarizing, and we have to follow this de-dollarization trend. This is linked with gold, and this is linked to the future, because even Morgan Stanley wrote this week, they're warning of the de-dollarizing trend could spell massive trouble for stocks. And right now we're seeing, the stock market euphoria, a huge melt up, but there's a big warning when this happens. I'm reminded of, Venezuela, and we'll get into that in the next segment of the show, but we have to be aware of what happens when the melt up occurs.
So the bank that has $61 trillion in derivatives is warning of a melt up.
Interesting.
The number 18778-SILVER, the website guildhallwealth.com. The debts don't matter until they matter, and they are starting to matter because your cost of debt is going up dramatically. Protect yourself with physical metal. Remember, if you can't hold it, you don't own it, you give us a call. We'll show you how to get involved in the market. We'll show you how to put physical gold and silver in your registered account. That's right. You can own it in your registered account. It's fully allocated, fully segregated. You own it. There's no counterparty risk. We'll show you how to do it. The number 18778-SILVER, the website guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show, the number 18778-SILVER, and the website guildhallwealth.com. Jerry, just before break, we were talking about a melt-up. There are euphoric distractions. Don't worry that your mortgage has gone up. Don't worry about all the taxes. The stock market's doing great. Don't worry that the government is hiring people and that's where all the jobs are, right? Being paid for with your own tax money and the money that they're borrowing against your grandkids and their grandkids' future. Don't worry about all that. It's euphoric. The market's only going to continue to rise. But sometimes good news is bad news. What is a melt up?
Yeah, what is a melt up? It's exactly what we're seeing right now. And in reaction to the dovish Fed this week, they signaled that they're going to be raising rates, or cutting rates rather, 3 times this year. People are debating, but everything's melting up. Everything's moving up in tandem. This is a very dangerous thing. And one way, and this has caused Morgan Stanley, the chief investment officer, to comment on this, warning that this is a de-dollarizing trend that she's noting. She noted that the U.S. dollar's dominance in global trade and its status as a primary reserve currency is being challenged, obviously, and citing factors such as the surge in gold and the termination of Japan's yield curve control. Japan just ended their zero interest rate policy.
They threw in the towel.
They threw in the towel. Meanwhile, Switzerland cut interest rates. They were fronting that as well. And these developments threaten to reverse the benefits the U.S. has enjoyed from their dollar strength over the years, including how they can import low import inflation and affordable energy costs, which have been the fundamental in supporting high liquidity and financing U.S. deficits and debts. So the U.S. stock market is a bubble. It's a massive bubble. It's a derivative, layered upon derivative. And just think about how, if we could step back and seeing why the stock market is, going up, hitting all-time highs in anticipation of Fed rate cuts. But we have 30 years of data here, Jeremy, that suggests otherwise, that actually stocks tend to drop after Fed rate cuts. This is going back 30 years. The performance, now this is coming from Nick Marjuli, who is Chief Operating Officer of Ritholtz. He marked that after each of the Fed's 29 rate cuts from 1994 to March of 2020, that returns dropped in the stock market, an average anywhere from 10 to 20%, that the stock market takes a tumble. So right after the rate cuts, you have a little bit of a melt-up period. Everything is reacting.
But we're getting the melt-up now.
We're getting the melt-up in anticipation.
In anticipation.
Yeah, in anticipation, which is a very dangerous thing for any bubble. Everything's bubbling over. But things drop quite dramatically in the stock market. And the argument here is to get into something that performs during interest rate cuts. And when that euphoria of the stock market takes a tumble, the market then transitions into the safe haven, and precious metals perform during times of stagflation. We're going to see a tremendous run up. And just looking at the derivatives, you look at this ETF market that is just got 580 million. 80 million into a derivative of an ETF. The derivatives market, which is called by Warren Buffett the financial weapon of mass destruction, they're destabilizing the bank's health. If there is we do have a ticking time bomb here. And overall, the derivatives market actually represents into the quadrillions. Some say some say $4 to $6 quadrillion. This is 16 times the world's GDP. The explosion of this time bomb could bring about the bankruptcy of the entire global financial system. And this is the reason why it's called a derivatives time bomb. This is what's going to go off. And even the ETF, that's a derivative. Because what is a derivative? It's basically a financial contract which value is tied to an underlying asset. So as the underlying asset of these ETFs are leaving, all of the ounces are disappearing. It's rendering this ETF insolvent eventually, empty and insolvent, and that's what's going to blow up.
And you're left with nothing.
And you better not be holding that. You better be holding something physical and tangible, something that you can hold in your hand.
Now here's this. Clive Mond,
Yep.
one of the best and slightly opportunistic chart guys in the business, has just put out a chart, a 20-year chart on silver, showing a huge double bottom, a major cup and handle, and he says the following. He says the case for silver could not be clearer. Gold has broken out and is forging ahead, and a giant cup and handle base is completing in silver that promises a major bull market. This is all caps. And even now, silver and silver investments are still at great prices. This is the time. This is the time. You know that a stock market can't go on forever. You know that a bubble's going to burst. You know that a black swan can happen at any time. How are you going to protect your wealth? Have assets that have zero counterparty risk that also happen to be incredibly valued. You can do that with Guildhall. Remember, if you can't hold it, you don't own it. And you can do that by direct. Take some silver coins, some silver bars, an ounce or two of gold, get your feet wet, start to understand the market. What does that hurt you? Right? What are you going to lose? The market goes up. The market keeps going up. Market goes sideways for a few months. You know, it's something you always have. It can't disappear. Can't go to zero. It's been around for thousands of years. So you don't have much to lose to start and to give it a go. Then, if you do get really interested and you say, okay, I actually want to protect my wealth, you can look at your registered account where you own it. It's held in a vault outside the banking system. So if you have a lira, if you have an old pension plan, right, that is now yours that you can use, you can move that over. We can help you move it and have physical product allocated to it that's fully allocated, fully segregated. You own it. It's held in a vault outside the banking system. And if you wanted, maybe not from a locked-in account, but if you had a TFSA or an RSP and you're willing to pay withholding tax on RSP, take delivery.
Sure.
We have RIF accounts. They take in-kind delivery instead of the cash.
Yep.
So, and why? Because you own the product in there. We're not chasing after it. It's yours.
Yes.
So give us a call. We'll show you how to do that. Jerry, some last comments.
Just remember, this is the third bull cycle in gold, guys. This is the time where you want to look at something and not just get by and not just survive. You want to thrive and grow your money. You want to grow your wealth, and you want to pass this on seamless and with simplicity. There's nothing safer and nothing more stable than precious metals right now. And just remind you, we had two prior bull cycles in gold. One in the 70s, where we rallied 2,000%, and another in 1999, where we saw a rally of about 700%. Between the two, that's an average of 1,400% growth for the gold market. Now, the cycle began at $1,000 gold back in 2016. If we apply 1,400%, like the previous two on average, you're at $15,000 gold. Out of 16-to-1 silver to gold ratio, we're at $940 per ounce silver, which is 37 times where we are today. 3,700% growth for your portfolio. Seamless, simple, and safe.
The number 18778 silver, the website guildhallwealth.com. Jerry, thank you so much. If you've missed a show, you can catch us on YouTube. You can also see us on X. Great information there. 18778 silver, the website guildhallwealth.com. Can't wait to speak to you next week here on The Real Money Show on 640 Toronto.